Ether is really different. Ether is more like a disruptive technology, a computing platform that they're building application layers on top of. That's really more like your thematic growth fund.
All right. So just as with any investment-related podcast, even though this podcast is for financial advisors, there is a chance that a consumer or a client may hop on and listen to this. So we're going to be talking about investments, asset classes. We might even mention a specific crypto asset along the way. So this is not meant to be investment recommendations. Consult your financial advisor, all those things you're supposed to do. You already know this, and you heard it earlier in the show, but we're going to start off with that. And then we're going to dive into the conversation. So Matt and Jeremy, I want to thank you guys for taking some time to join me. Matt and Jeremy both are at WisdomTree. They are partners with us at OnRamp. So this is kind of a special podcast for me that it is Advisor of Tomorrow, but it's also a highlight of OnRamp and what we're doing. So it's kind of two birds, one stone. And while I mentioned we're not making recommendations for specific investments, I will make a recommendation for WisdomTree that you should go check them out. While we're going to be chatting, I actually have a presentation that you guys did for the AGC kind of up that I used to kind of form our conversation. Obviously, I don't want to go through a slide deck that those listening can't see, but I think it's a great story and I want to hop into it. But before we do, I'll toss it up, let either one of you take this one. But for anybody who doesn't know WisdomTree, or maybe they just know who WisdomTree is, but they don't really know WisdomTree, can you guys give an introduction to the company and what you guys are about and kind of your view on advisors and how you structure your investments to help us out?
Yeah, maybe I'll start. I'm sort of the second longest employee at WisdomTree after the CEO, so past my 16-year full anniversary earlier this summer. So, I was working with Jeremy Siegel of the Wharton School. I met him in 2001. We passed our 20-year anniversary together, and I helped him with stocks for the long run and the future for investors. He joined as a strategic advisor to WisdomTree in 2004. The research behind our original ETFs were very much in line with his research on how to protect from valuation risk in stock indexes, and he liked the dividend fundamental type approach when we launched 20 ETFs in 2006 tied to that. So we are an ETF firm globally, but we are really more than that. We're sort of an index manufacturer. We're active ETF sponsor. In Europe, we have about 75 billion globally. In Europe, we're sort of leaders in commodities, and that's included some direct crypto assets of late. The European regulators have been earlier to approve those type of products than the U.S. regulators. But WisdomTree really, starting from our CEO, has a real interest in digital assets and trying to do more with financial technology beyond ETFs. I think you're going to see us, that's one of the reasons why we invested in OnRamp was, to help get closer to conversations with advisors. How do you put digital assets in portfolios? I think you're going to see a lot from us over the coming years beyond ETFs. As people think of us as ETFs today, you have to think of us as a lot more than that in the future.
Yeah, absolutely. And when we think about even just for me, what I really appreciate with WisdomTree, I've been here for a few years, came through an acquisition through WisdomTree and Advisor Engine is you're really focused on the research side. And one thing I love about WisdomTree is as a brand and as a company, we've really wanted to step out and say, you know what, we want to help advisors. We want to help them succeed in a different way in addition to creating really great products and offerings for them. So I'm more on the side of helping advisors, growth, and innovation, and looking at the digital assets and more innovative type things than say like commodities.
And just a quick plug on how you guys are helping advisors outside of just the ETFs and the allocation. I mentioned that you guys came and did a presentation of kind of what we're talking about with the crypto model portfolios, but Matt also came and did a presentation about website and kind of how advisors can think about it, because that's kind of where your background is. I highlight that in that WisdomTree is doing more to help advisors with their practices, website design, things to consider to improve SEO and things of that sort. So a lot of great resources that I can't sing your guys' praises enough. And a big thank you also for investing in Honor. I forgot to mention that earlier on. Well, let's get into it. I don't know, maybe from my standpoint, I think of WisdomTree more as a innovative fund company, because I know that you guys have done some cool things with 60/40 and kind of tweaking those things with, and what is it? There's like a 60/30/10 or something like that at one point. Is it a fund like that, Jeremy, or something
There's
like
a,
that?
so the Well, there was the ETF that was born from Twitter, you could say.
Right.
It was more than born from Twitter, but it's got a reputation of being discussed on Twitter. That's called the 90. It was originally called the 90/60. Today it's called the Efficient Core. It just passed its 3-year live anniversary, and it's, if it hasn't been rated by Morningstar, but it's been a top decile fund since it launched, so it's showing like relative performance, but with lower risk, because it's combining bonds with equities. It's sort of a levered 60/40 is the idea, sort of 1.5 times a 60/40. Cliff Asness wrote some of the original research on this back in the 90s, where he talked about the levered 60/40 being better than 100% equities alone, and so that it's taken its own little life of coming from a lot of conversation happening online, but it's now a almost a $600 million fund, strong track record, and we're excited to build more models around that fund as well.
And to the point that you guys are forward thinking, you're not just sticking with the basic things. You're thinking of ways to drive value and create new strategies. So it's not a surprise that when it comes to the model portfolios and incorporating crypto and looking at that space, that you would be one of the leaders in that area. But I'm interested, like, what was the process of incorporating that? I know you guys didn't wake up one day and thought, oh well, Bitcoin, it's here to stay. Let's all of a sudden put it in there. I'm sure there was a process. So,
Yeah.
kind of what was how long has the conversation been going on, and kind of what was it like to get a big company like WisdomTree to think about incorporating crypto and then take those first steps?
I guess my personal journey, and Matt probably has his own journey. He could talk to how he came to it. Our CEO started. We have a strategy team that's looking at all sorts of big corporate strategic initiatives. He had mentioned to our strategy team, I'm one of the members. There's a number of members on that team, and said what could do to ETFs what the ETFs did to the mutual fund. And so there was this big high level question: are there any technologies? You hear a lot about direct indexing as one of these things. Was that going to take over ETFs? And really, we actually think a lot of elements of blockchain technology can be very value added. So when I mentioned you're going to have to think of us as more than ETFs, we are going to be applying blockchain technology to that kind of asset class structures beyond thinking about Bitcoin and Ether as exposures. We think of those as exposures you want access to, but we do think of digital and the blockchain as potentially being a disruptive technology that can change really all of financial infrastructure. So we've also invested in a company called Securrency that's helping us with some of that technology infrastructure and bringing really a compliance layer on top of everything into the tokenized world. So that's partly was that question of what can do to ETFs, what ETFs did to mutual funds. My personal journey to buying Bitcoin was through your founder, Tyrone. So he had been at Eaglebrook, another firm, and when he first joined Eaglebrook was as we were studying and ramping up our own diligence in what we were doing in the space. And I met him. I did a podcast with him last May, I want to say, which is when I close to when I had first bought some through Eaglebrook, and so he was my first entry to my first purchase. So I have a lot of gratitude for Tyrone, and it was sort of right place, right time, thinking about it for our application beyond Bitcoin. Bitcoin, again, is just one exposure that we want to provide exposure to, but we do have a broader vision than just those specific crypto assets.
Yeah, absolutely. And thinking about even like my personal background, so I've been interested in Bitcoin since early 2014. I was part of a digital nomad internet entrepreneur group. People started talking about this thing that at the time was, I remember it was in the couple hundreds of dollars. And I was part of a team that tried to bring it to NASCAR actually through one of the drivers. Similar Dogecoin at the time was doing something with one of the drivers, and they had a sponsorship. So there was a company in Atlanta called BitPay, and it was just something that I realized early on, hey, this is going to be important. People are catching on to this. People working around the world on the internet that have never been able to do it before. And it just kind of took hold and stayed there and stayed really interested. And eventually, as Jeremy mentioned, when WisdomTree started talking about it more internally, we started hearing other people internally talking about it and really discussing it, and you could start seeing something happen, not just in like groups I was in that were more internet entrepreneur, digital nomad type people, but real serious um, people who were in the financial industry.
So Jeremy, you had a great introduction from Tyrone, and Matt, you were in it early, so you were hopefully
Yeah.
you bought back in 2014. If you did, it's probably still working. But aside from being around people and hearing about it, and having someone like Tyrone introduce you to it, do you remember? Was there what was the light bulb moment? What was like? Was there a piece of research or a book, or was there something that you read or saw that kind of made you really believe it, or was it just the environment you were in and just trusting people? Because I do think there's a lot to be said of identifying people who have a good track record, know what they say, and just kind of ride their coattails a little bit. But was there anything that you really stood out and said, okay, after reading this, seeing this, hearing this, I'm a believer now?
Well, there's nothing like if you're trying to learn about something and doing something, then investing it yourself, understanding what you're doing. And so I think part of it was pushing my own learning envelope and wanting to get involved. And I wanted to be, I knew we were going to get more involved. So I wanted to own it and like own the responsibility of knowing what it's all about. And so I was the reasons I got involved with Tyrone is because I was looking at it for a long time before that, and then was waiting for that right opportunity. That was a good extra catalyst. The I'd say to me the narrative on Bitcoin, and I've certainly done a lot more than Bitcoin now, but the narrative on Bitcoin was very straightforward. That got convincing was certainly and this is somewhat how we've thought about building suggested portfolios around this is Bitcoin has become like the new generation's gold. That's the investment narrative. That's one. There was this whole currency question can be used for payments. But the investment narrative that is most dominating I see today is the new generation's gold. And partly from, again, a WisdomTree selfish standpoint, if you think about us and our asset base in Europe, we're the leaders in commodities. We have a large cross section of gold assets in Europe. And if this is going to be disruptive to gold, I wanted to understand it because we have a legacy asset base in gold. And so, as direct competition for gold, if this is taking some of the demand for gold, we needed to know about that and we need to be all over that. So that was, the additional work reason why we took it very, very seriously. And from that perspective, that 20 million Bitcoins in existence eventually, and so a certain amount, 2% new supply, the whole question was going to be how much demand is there going to be and where are you on that demand curve? And so it became I thought it was very simple at the end was, you've got, the story is simple, supply is fixed, and, how much demand are you going to create? And I saw the case that it was through a lot of ups and downs, obviously, before I got involved, but that there could be a lot more on ramps into the crypto world, and then that would eventually, create more demand. And I didn't think that had played out. So that to me, and I still think it's not easy for firms to buy crypto today. And so while there is a generation who has a lot, like my brother included, who, he doesn't buy stocks, he has crypto, but, so he's not your typical generation, but there is the traditional assets really hasn't embraced it, and I think in a meaningful way.
Yeah, absolutely. And thinking, even for me back in, Jeremy, I might be part of the younger generation you're talking about. But even thinking about then, for me, it was all about just risk and just diversifying. I had friends who were going after multiple passports. I have a friend who denounced citizenship from the US and thinking about risk of after selling a company and different things of that nature. And so for me, it just kind of stood out once I looked at it, the basic supply versus demand. And I had no financial background, but it was interesting. And people who I trusted really, really got on and said, hey, just a little bit, just invest, just look at it. And I started seeing and believing what people were talking about and saying. And I went through all the roller coasters. I did good things, I did bad things, and it's interesting, but at the end of the day, what I was seeing was the number was going up more. So it was exciting.
And I agree that like through experience is one of the best ways to learn it. So I think a lot of people's journey is you learn about it a little bit, you read a little bit, and you're like, okay, now I'm gonna buy some. And I actually wrote about it. So I bought my first little bit back in early summer of 2017. So big before the big run up, which I felt very good that I didn't get caught up in that. Was like I was a little ahead. I was still late, but I was before that big mass purchase that went on that year. But I just recently, so you buy it and you play around. Like I bought it on different exchanges, learned how to send it. I still get nervous when I'm sending it from wallet to wallet, just because like, what if like somehow someone's figured out how to hack my wallet code, and when I copied and pasted it, it messes it up, and so it just like, it still makes me nervous. But I think it's a good way, and you kind of play around with it. So I just recently purchased my first couple NFTs, just to kind of again learn that, okay, got a MetaMask wallet, let me buy some ETH. How do I buy it? How do I send it? How do I see it? So I bought like Nice Drips was the one I bought. They look like ice cream cone type things. They're pretty cool. And then I bought one today that looks really, really cool. It's weird. Like I'm not into aliens and things, but it's called Alien God. There's gonna be 300 of these NFTs, and they kind of move and stuff. They're really cool. But I'm only buying NFTs like super, super cheap just to learn it, with no expectation of it being a Bored Ape or being a crypto punk. Like if that ever happened, that'd be awesome. But just to learn how to do it, to again be able to have conversations with clients, because they're gonna ask, and we're learning that dismissing anything in this space is not an acceptable answer from a financial advisor. You can have I believe, and I'd be curious to get your guys'. I think it's next up in here, or a question a couple people will go ahead. Curious to get your perspective, but I don't think dismissing it is acceptable. You can say I don't like it still, I don't believe in it, but I think advisors today, which is why having things that the resources you guys have, having a reason for your opinion rather than just dismissing it is going to be important. So you can say, hey, I've gone through OnRamp Academy, I've looked at the research WisdomTree puts out, I've read these things, I've watched these videos, I understand the hot wallet versus cold wallet, on-chain versus off-chain. Like I understand the space, and I don't think it needs to be invested in. And I think that that is something that people will respect, because you have an opinion that's formulated off of research and time spent, versus it's funny money, it's magic money, it's a Ponzi scheme, whatever advisors want to say to dismiss it. I don't think that's going to fly. From perspective of you guys would potentially be clients of an advisor, and then also from the perspective of being in the business, kind of what do you think as far as if the things that advisors run the risk of missing if they continue to dismiss and don't learn about this space?
Yeah, it's fascinating. To me, a lot of it comes down to, if advisors just dismiss this fully, they're going to miss out on a lot of clients, potential clients. For me, that's like just a pure fact based on, I work with advisors on growth. It's marketing, it's psychology. If you have clients, especially as you think of a wealth transfer, younger clients who believe in Bitcoin, believe in Ethereum, look at not just NFTs, but even what is the use of that afterwards. Limited supply of access to events, or whatever it is, the usefulness behind that. If you're an advisor and you just say, you know what, I don't believe in it, we're not going to touch it, then those clients who want to be interested in that, whether receiving a great inheritance or are just successful business owners, whatever they look like, they'll say, no, bye, I'm going to go find someone else who understands what I actually want to do. And so I think it's so important when it comes to psychology of understanding clients, fitting the needs for them, marketing, and everything there, that you just have to get in, just use a little bit, play with it a little bit, try and expand your mind a little bit, look and see what some of the most innovative people are saying about the space and doing on the usefulness side of things as well. It's so important. I mean, at the end of the day, it's how well do you understand your clients, and can you help them achieve the life they want, right?
And who needs the most advice is people who made a lot of money in crypto and are thinking about, how do I manage any rebalancing? How do they manage transition planning, tax planning, future wealth diversification if they do eventually decide they want to lower their exposure? How do they lower their exposure systematically? What are right strategies? But also, it's almost irresponsible if you have clients who have exposure and you don't know about it. How many people, I mean, this is, to me, Justin, one of the things we're excited about OnRamp is you can help people bring in their clients' crypto holdings from a lot of different exchanges and wallets. I mean, I was talking with a multi-billion-dollar RIA just recently, had dinner with somebody, a CIO of a large firm, and they are trying to build their own solution on how do they integrate these crypto assets on a platform like Gemini. I'm like, well, you got to call the on-ramp team because they can do that for you quite quickly. But for planning, that is an important part of planning. You need to know what your clients hold, and then how do you plan around it, and then. So the first step is just knowing what your clients hold, and then the second step is having a plan around it, and then thinking about if you do want to incorporate it meaningfully in portfolios over time.
So on the other end of the spectrum, we got one end where it's dismissal. I'm going to not even talk about it. I do think it's possible to be too far and too excited about the space right now as far as advisor working with their clients. Do you see any risks of advisors being too ahead of the curve when it comes to the space and not being a little bit more cautious as they wade into it? Or I'm curious what your thoughts are on the other end of the spectrum.
I mean, yes and no. I guess advisors they need to understand their clients. So absolutely, if an advisor says, you know what, put it all there and you're going to be able to minimize risk, like there's probably certain things that don't line up. I can't speak from advisor standpoints, but me as a client of an advisor, if my advisor is not kind of helping me balance and understanding my life goals and where I want to go, then absolutely, I think they can go too far.
One of the areas I think is risky is, especially if you go outside the spectrum of Bit and ETH, you start looking at NFTs. I do think that the whole NFT market today there's going to be a lot of things that go away. There will be some that stick around, and there'll be like legitimate NFTs and projects, but there's a lot of copying that's going on. And I think that if an advisor starts to get way out in that area, that could be an area of risk. But just with anything, I think the answer is yes. You can go too far out, just like you can with anything. What I want more advisors to realize is the approach to the crypto space should be not that much different than your approach to the traditional space. You're going to do the same type of research. You're going to learn about it just as you would. There's tools that are out there to let you see how does it impact a 1%, a 2%, a 5% allocation. You can do the same research you've done with traditional assets and just approach it the same way and almost give it the respect that it deserves as an asset class. I don't think that we can question whether or not it's an asset class anymore. So I would liken it as you can get too crazy with it, just like you can get too crazy going, all small cap, all large. Diversification is the answer. So I want to dive back to kind of like the research. So from working on building the model portfolios, determining it's going to be a part of what WisdomTree offers now and going forward, what's the research telling advisors or telling you all that makes you want to incorporate this as far as whether it be diversification, performance, whatever it might be? Like, what are the exciting things that research is showing us that this is something to be incorporating?
In my introduction, one of the things I didn't do is talk about how one of the things we've been investing around recently has been model portfolios. So, we had hired Scott Welch, the CIO of Dynasty Financial Partners, a number of years ago, and to lead our models business. And so we have now, traditional ETF models, ETFs and mutual fund models on platforms like Merrill Lynch with Professor Siegel. We actually just got added to the Morgan Stanley model, third-party model center platform for sort of Siegel branded income models also. But a lot of models are customized. So like our team will do a lot of customization work if people have models and they want to keep certain things. We do say well over half that model business often ends up a custom consultation with our team of experts. But we did want to launch, as we thought about this crypto space, we have thought about how do we provide some type of thoughts around this. And so in terms of how we thought about it from a basic starting point from asset class perspective, one of the things we're talking a lot about is the challenges from the equity bond mix today. And so if you look at your standard 60-40, I mentioned sort of those Siegel models. We even before the pandemic, we said the 75-25 was the new 60-40. And really now, if I footnoted where is that 75-25, it's really 72-22-6, with 6 being sort of commodities and gold. We're sort of underweight. We're definitely overweight stocks and underweight bonds and overweight inflation sensitive assets. So part of that is a view where, the TIPS yield, the TIPS is the inflation adjusted bond yield, the 10-year TIPS -1%. I mean, that's sort of locking in real losses of purchasing power. So a standard 60/40, we're very comfortable not, really, if you're going to add something like Bitcoin and what we think is ultimately this new generation's gold, think about it just like I just talked about, where you're funding it from something like bonds, which we think of as having a negative expected return, not providing real return, and sort of like we funded a gold position in some of those new 60/40 models. And then, the more equities you take, so we have things like an 80/20 model. In an 80/20 model, there you have less of the diversification, you have a lot more equity risk. In something that's that much more equity risk, there we would think about funding allocations from stocks, because you want some of that diversification that you would have in a real risk-off environment. Bonds would provide more of that natural hedge, whereas we've thought about Bitcoin again as the sort of new gold type allocation as an inflation sensitive type asset, and an alternative to commodities or gold there. So that's somewhat how we thought about it. Some of the assets like Ether go beyond, where Bitcoin I think really is more of a single use case like that new gold. Ether is really different. Ether is more like a disruptive technology, a computing platform that they're building application layers on top of. That's really more like your thematic growth funds. Like, we've got things like a cloud computing fund and biotechnology, what we call biorevolution, cyber, security, all these exciting growth areas. And in thinking about if you were to want to have a real growth mix, some of those disruptive technologies, Ether plays a central role to that. And so you could think of crypto assets as some of the ultimate disruptive technologies. And so allocating in some fashion, and we thought about equal allocations between Bitcoin and Ether as a way to tap into some of that disruptive technology in that type of setting.
And that's really where we look at like what Jeremy was saying in our views on the 60/40, the 80/20. We came down and we ultimately said, all right, after all the discussions we're having with advisors and all the research we're looking at and really pulling together everyone's minds, we came back and said, hey, there's three main plus crypto model portfolios that we're going to put together. So the first one is a moderate plus crypto model portfolio. It's a 60/40 approach where we reallocate, like Jeremy was mentioning, just a general idea, but we reallocate 5% of the model portfolio weight from fixed income to Bitcoin. And this is it's a great starting point as well when you think about, hey, what does this look like? How do we reallocate? Where are we pulling from? How can we take the discussion? We're happy to have more discussion around that. The second one is the aggressive plus crypto model portfolio. That's looking at the 80/20 approach, where we really reallocate 5% of the model portfolio weight from equities to Bitcoin. And then one that more I talk with advisors. Advisors will ask more around some of the allocations and specifics there, which we could they're all available on WisdomTree's website. But for me, the third one, so the disruptive growth plus crypto model portfolio, really looks at those 7 key thematic high growth areas with the main objective of achieving maximum long-term capital appreciation. And allocations are really focused on market growth potential. So for example, when we look at those, we're looking at Ether, we're looking at Bitcoin, we're looking at cloud computing, genomics, different platform business models, cybersecurity, fintech, and the gig economy, and also just general blockchain chain. So not just having focused on Bitcoin and Ether directly, but then also what are other companies and investing and focused on other companies in the blockchain industry as well.
I think the model portfolio is great for advisors that realize they need to be able to offer it. Their clients want it, but they're not quite comfortable doing it themselves. To have somebody make that decision of, okay, we're going to take it from the equity or we're going to take it from the bond. Like, I don't think a lot of advisors even thought that far ahead of, okay, now that I'm going to allocate to this, even if it's 4 or 5%, where am I pulling that from? And to have somebody make that decision for them that's trusted, that's done the research, I think is a huge advantage. I want to pause just for a second. You guys live in the model world because you guys have spent a lot of time research building it. I, for one, have never used model portfolios. I've always liked, when I started in the profession, I thought I would have loved to have been like a stock picker, and I loved picking the funds and doing my research. And then you learn that that's like a lot of wasted time. There's more efficient ways to do that. But for anybody who has never used a model portfolio before, how does that work? Because I think some people may think, oh, I just plug into WisdomTree and they do it all for us. How would an advisor use a model portfolio in their practice?
It's a great question, Justin, and that's one that we continue to talk about. Can we get to that place where you just send, we do everything? I mean, today, we're operating in a world where we are working with various platforms. I mean, that, we look at as on-ramp as a platform that ultimately can help people get the crypto allocation. Like that's one of the few places you can get the direct crypto allocation in a meaningful way, and you could help trade and do that. The rest of the ETF part of the models would come through a platform like the TD Model Market Center or Riskalyze or Orion or some of these other model platforms that we're working with. And we are working to get those specific models on different platforms. But the way we've traditionally delivered models is through the big platforms, and InvestNet's another big platform that you deal with. 55IP is one that manages tax planning around some of these things. And so, and then there's obviously advisors. We do maintain it. We do have what's called a model adoption center on our website that can help and really has a lot of tools and can help manage the journey with all sorts of notifications on what are the rebalances, and for people who want to then take it and load it themselves, whatever their own rebalancers are, we can support that. But it is really working through these platforms that offer models that we can deliver the ETF through today.
And one thing, like in addition to Jeremy mentioned the model platform, the model adoption center. So on WisdomTree's website, something that we found in our research over and over again, and it was really important, was that advisors, clients actually wanted, they wanted to, and they wanted to see, and they believed that advisors were more of an expert when they used other people's expertise and used things like models and just positioned it the right way. So similarly, like why I go to an advisor and want an advisor to help me is because I'm not going to be the specialist. I need to have the advisor have access to everyone. I want them to have access to the wisdom trees of the world, the top people in research in all the different areas, similar to why you would go to a doctor. And you don't want a doctor who says, hey, I know everything and I've always known everything about this one area, right? If they don't have access to the internet and other doctors and a network of training and everything like that, then they're not gonna be as good as they could be. So I want one that's leveraging everything out there. Similarly with the advisors on WisdomTree's website, the Model Adoption Center, we actually even have guides that give you downloads of here's how to communicate with your clients in a way that our research found helps position you as more of an expert. Here's an email you could use. And we have different guides and content like that. And that was really important for us when we thought of what is WisdomTree, how are we innovating, how are we helping advisors past just creating this and saying, all right, you can go use this now, this model.
So I have one more research area question before we go do what advisors like to do and find out what other advisors are doing, at least what you guys are seeing. But what are the expectations that adding crypto to the portfolio might offer in the long term? And now this is where the disclaimers come in, past performance, yada, yada, yada. Like, we all understand that. And again, if we were adding a new small cap value fund or something like that to a portfolio, the advisor is going to go out, they're going to pull the history, they're going to plug it in their model portfolio, they're going to back test it, even though back testing doesn't mean anything. And for whatever reason, when we do that with traditional investments, advisors are okay saying that's how we do our research. And then does that line up with our future our thesis going forward? But yet when we want to go back test the last 12 years with Bitcoin, all of a sudden back testing is crazy. Like, why would you use that? But when we do back test, and if we believe in the thesis going forward, what are reasonable expectations? What's the argument for including crypto into the portfolio?
Yeah, it's and Jeremy, I'll let you answer as well. I'll give my take really quickly, but for me, it's really looking at, and something that we kept finding and I'm hearing from advisors is just one, meeting the needs of clients. So clients who believe in it, they see headlines, they talk to friends. So that's really important. But then two is just another way to minimize risk. whether it's true or not. I know a lot of my friends, even those who are very successful, want just diversity. They want access to everything across the board. And if you just completely kick out something, then they believe that that advisor's not helping them the best they can. So for me, it's really, where do people in the world, where do your clients as advisors want you to be? What are they interested in? Where do you need to have conversations and really help them with?
If I have to guess, Jeremy's going to hit on my next comment real quick. But when you said minimize risk, I'm sure there were a number of advisors listening thinking, wait, Bitcoin minimize risk? It's gone down 80%. It went down 50% this year. Like, what do you mean risk? Minimize risk? It's a very volatile asset class. But I'm guessing research that Jeremy might cite kind of alludes to that. And if not, we can hit on that because I know you guys both know it. But I know people thought that, but they might be surprised at what the longer term hold actually means for risk.
Yeah, and that's just my personal. I guess I do have to say that too. Like, that's just me personally. It's not WisdomTree's view or even Jeremy's view and anyone else. But for me, it's like I mentioned, my background came from living around the world, traveling, seeing what if the government printed $900 trillion, like what does that look like? How is that going to stack up to China in the future and just different global areas? And so for me, that's what's going on in my mind. And I have a lot of friends too that's saying, well, there's this supply and demand thing. There's sure there might be companies that really invest and jump in heavy, and it's a volatile market. But yeah, just it's interesting. Yeah, I appreciate you jumping in and talking about the risk, because as advisors, absolutely, they'd say, well, that's crazy. Why is this guy saying that? But when you think of your clients and you think about potential and think of the future, the long term, and where people believe it's going, I think that's important to consider.
You know, I think the way to, and certainly your people are at, and we created models for it because we do think there is the ability to add to returns, and you know, so that the payoffs are essentially protecting where, you know, again, coming back to where are you funding it from, where in the portfolio are you, why, what role does it have? Well, it's again this new generation's gold. So what's going to create the demand is this inflation narrative that's coming, and all the money printing with the fixed supply of Bitcoin, people looking for these alternative hedges on inflation. And so, you know, to the extent that it can keep taking market share from the gold people, that is one of the things that can create more demand for it. And sort of people talk about the total size of the gold assets, call it $10 trillion, and Bitcoin's $1 trillion. So as it keeps gaining market share, that's some of the upside you can get in Bitcoin. Certainly, Justin's point is very well taken, that it is a volatile asset. Having rebalancing programs back to target allocations can be meaningful. You know, when we did some of the modeling, and this is again where OnRamp has some great tools in their academy that can show different simulations with different rebalancing frequencies and different allocations. You can add, you know, in some of our stock, bond, Bitcoin work, add some Bitcoin and have it not increase risk up to a few percent allocation. And so some of that will be, you know, some of the rebalancing assumptions is obviously the time period you're looking at. We didn't go all the way back where we had some of the really, really crazy returns going all the way back. You know, we looked at more recently from, you know, some of the highs in 2017 through some of the more recent periods. You know, but I think to us it is a useful diversifier from stocks and bonds. It is a new source. And again, I think beyond Bitcoin, when you get to things like Ether, if you're like a value-oriented investor, these are some of the new technologies that will add, you know, quote unquote growth, like, you know, as a hedge to your traditional buying low book value stocks, you know, say a DFA value person. This is more of a growth side of the equation, and sort of the new technologies that are sort of more disruptive, and that's where something like Ether and some of these other allocations could become nice diversifiers from your traditional stock and bonds.
All right, so Matt, this may be a question for you, but advisors always want to know what other advisors are doing. So since you're talking to advisors about growth, and when it comes to crypto and adoption, in August of 2021, where are advisors from your perspective? Are they still super skeptical, or are you starting to see the trend be to where they're a little bit more accepting and more curious? So kind of where advisors today, and then what are you seeing those that might be more on the adoptive side moving, and what are they doing?
Absolutely. And I would say we get the mix. So I definitely get the mix. It's way fewer advisors are skeptical. More and more advisors are in that accepting there's something here education phase, which is why we've been plugging a lot, but OnRamp's Academy is so important and such a good resource for advisors just to go in and see and learn and really pull all the best insights to have a great source of knowledge. I'd say a majority of advisors are in that educational kind of, I'm trying to learn how to communicate with clients. I'm having some discussions with clients. I don't really know how to have those discussions, but I'm trying to educate myself a little bit more to come down with the solution. And then we see advisors who are working with OnRamp and saying, hey, we're working towards a solution, or having those conversations with clients, and even just understanding and trying to get a better feeling, like Jeremy mentioned earlier, that a lot of advisors, their clients have digital assets and cryptocurrencies held away. And so advisors don't always realize that. So they're trying to be a little more open and having basic conversations of saying, hey, do you have any Bitcoin or Ether? What are you thinking about? And having more of those conversations, and either not allowing, because their clients can do what they want, right? But having those discussions and saying, hey, we would like to know so we can put our best specialty for you and help you achieve your goals, and look at the whole picture instead of just a minimal picture without this sleeve, without this area. So the majority of advisors are definitely in the educational phase. There's a few skeptics out there. I'm seeing those kind of not as much, but then the advisors who are using a platform like OnRamp and trying to get going forward and working forward, or they're knowing that their clients have a certain amount in the different digital assets.
And some low-hanging fruit for those advisors that are more in the curious and adoptive stage. I think if you document and share, assuming you're blogging or creating some type of content, if you document your journey, people are going to reach out because they want advisors that are willing to help them with it. And you will also be surprised at how many of your clients have been holding this away from you that you didn't know about, just waiting for you to say, hey, I'm ready to talk about it. I'm ready to make sure we can talk about it if you have a question, and they're going to reach out to you. So it's kind of like clients are waiting for that permission to tell you that they have this crypto they've been holding away from you. They might be getting uncomfortable because it's becoming a bigger part of their portfolio and there's concerns, but they don't want to bring it to your attention because they're afraid of what you might say. So I think there's a lot of value in just documenting, hey, I'm learning this space. Clients are asking about it. Here's what I'm learning. Share some resources with public. And then if you keep on doing that, you kind of position yourself as an advisor who is forward thinking and looking at the future. I guess that's what forward thinking is. Not to say the same thing twice, be redundant. But it's a good way to market yourself and differentiate yourself if that's the direction you want to go.
Absolutely. And if you're an advisor and you find out clients have money held away, you might need to think about readjusting their risk profiles that you have for everyone, and start.
Right.
That might not have been an initial thing how many years ago. So it's really important that you have those conversations to even kind of readjust and reconsider. Absolutely.
All right. What did I miss? Anything that I missed that you guys want to make sure we bring up and discuss?
The biggest thing for me is advisors are in the educational phase. So OnRamp Academy, a fantastic spot for advisors to learn more. WisdomTree's website, you can go on the strategies tab at the top, clicked on the evolution of crypto. If you want to see the very specific allocations that we've talked about in the plus crypto model portfolios, the moderate, aggressive, and disruptive growth one, you can scroll all the way to the bottom of that page and they're there. If you have to be logged in as advisors, it's for advisors only. So we're putting out a ton of content that advisors can use and leverage, like I mentioned as a doctor, leverage the best resources out there as well. Jeremy, was there anything?
No, this has been a great conversation. We appreciate coming on here, Justin.
Definitely. Well, I got one question for each of you. So I have an ending question everybody gets. Patrick O'Shaughnessy got the real nice one. What's the nicest thing anybody's ever done for you? My question comes from seeing Emily Bender, who was one of my first guests as we rebooted this podcast back up, speak in person at DFA one time. She had a walk-up song. Like, think about being a keynote speaker, had a walk-up song. So I love music. I think music tells you a lot about people and who they are, and you get a feel for them. So conferences are coming back. Let's pretend you're a keynote speaker. We'll go Matt first. Matt, what would be your walkout song? What are you coming out to the crowd
Yeah,
to?
that is a great question. I love it. I definitely love it. Mine, hands down, would be "The Nights" by Avicii, and it's just one of those songs for
Okay.
me that it just tells you to live your best life. That's why I'm here. Man, I could take that in a whole bunch of different directions, but absolutely, "The Nights" by Avicii.
All right, Jeremy, what you got?
One of my songs I've been doing on repeat a lot, to get pumped up. And it's been in our workout classes. It's called "Survivor" by 2WEI, and the chorus is, I'm a survivor. I'm not going to give up. I'm going to work harder. I feel like that's very Wisdom Tree, very mentality of how we are approaching life. So I think that Survivor song gets me going.
You sure you didn't mean Survivor by Destiny's Child? Or was it Beyonce? I know Beyonce was a part of it. I can't remember if it was the group or it was her by herself. Just kidding. Awesome. No, I love the answers and the reasoning behind it. Like, again, music, there's a story behind it. There's a reason it speaks to us, and everybody takes something from different songs. So I love that and appreciate you sharing that with me. So, no, I agree, Jeremy. This is a great conversation. I think it's going to be helpful for advisors. I didn't want it to turn into, an advertisement for OnRamp and WisdomTree, but ultimately we talked about it a lot. But I also think we have a duty to let all the advisors know that there are resources out there to help them. So if we brought ourselves up a lot, we're proud of the work that we do. We believe in it. It's our duty to let them know it's there. Carl Richards has a quote that I love that's something to that extent. If you believe that your work can change the lives of people, it's your responsibility to let people know what it is that you do. And that's what it is. So yeah, we dropped OnRamp a lot. We dropped WisdomTree a lot. It is a partnership between the two of us, but I think it's a great partnership, and I don't think there's anything wrong with that. So I know that you guys back up what we talked about. I know OnRamp's going to back up what we talked about as far as delivering to the advisors. So while we're heavy dropping our own names, I think it's warranted and it's due. And if you go in and check it out as an advisor, I don't think you're going to have any questions about what it is we talked about. So I appreciate you guys taking the time. Sorry for the mix-up on Google Meet versus Riverside. That's all on me, but we got it done just in time to get you guys on the rest of the day. I'll have links to the website.
Nice.
I might even try to find
Awesome.
the videos for those songs and put that in the bottom of it as well. And then also put your guys' social media so people can find you and follow you if they're not already doing that. But I appreciate, again, the time, also the partnership on the OnRamp side, and obviously WisdomTree's belief in the company as well. So we'll be probably doing more of these as time goes on. I'm sure you guys are going to evolve what you're doing. So as WisdomTree learns new ways to incorporate crypto, I think it makes sense to bring you guys back on and just talk about, hey, here's what we're seeing, here's what we're doing, and just keeping the advisors out there up to date. So
We hopefully have a lot to update you on over the course of the next, 6 months. Hopefully a
sounds
lot
good.
to talk about.
Awesome.
Sounds good. Well, we'll do it again beginning of the year then.
See
All right,
ya.
guys. Talk to you guys later on. Everybody, thanks for watching. Thanks for listening. And we'll see you all in the next episode.